You have less than 3 weeks to file your income tax return. Scary, isn't it? Well, that's exactly why our special series on taxes is just in time. Financial advisor Ray Martin is here to tell us how to get as much money back from the government as possible. Good morning, Ray.
Hey, good morning, Julie.
Do you find that most people are paying the government too much, or they're not getting as much back as they should?
You know, government study after government study continues to support that millions of taxpayers fail to claim billions of dollars in tax deductions and tax credits. And the IRS knows this because they know the expenses you could deduct. They get that information from other providers. And they overpay their taxes. People overpay by, they get less in tax refunds to the tune of hundreds of millions of dollars a year nationally.
Wow. Well, about 60% of Americans have an accountant do it for them. So should they even have to worry? If you fall in that category, should you have to worry about this?
Yeah, don't take false comfort that just because you hand over all your information to a tax pro, they're going to claim all the deductions and tax credits you can get. Some of these studies from the IRS even recently reported that even the millions of tax returns where people fail to claim deductions and credits, half of those are prepared by paid taxpayers. I'll give you two reasons for this. First of all, some of these new tax breaks are brand new, and if you don't tell your preparer that you might qualify, they might not get the information there. Also, these folks are working hard. They put on 80% of their work effort in 3 or 4 months of the year, and so they're really burdened by a high volume of work. You got to help out your tax pro here.
Okay, here's a perfect example of a new tax credit that you should probably talk to your accountant about. Tell me about this new phone tax credit.
Yeah, this is a credit of a refund of $30 to $60 or more of the taxes that you would have paid for phone taxes on your bills that you paid from March 2003 to now on long-distance or unbundled phone bills. The IRS says almost all of the 136 million tax returns should take this credit. It's brand new, line 71 of your 1040. You know, but they looked at 3 in 10 tax returns filed in February, didn't take this universal credit, half prepared by a paid tax preparer. So it's brand new. You should be able to take this. This is because the federal government stopped collecting taxes on phone bills, and they said they lost a court case, so we should all get a refund, $30 to $60 at a minimum on our tax returns.
All right, let's talk about deductions, because this could be a gray area. You know, what people want to write off. You know, like some people might say, you know, you should write off that tie. You're on television. You have to wear a tie for TV.
Yeah, this is a whole category of deductible expenses. We should put up a list here for our viewers here. And this is a whole area of job search costs, work-related public, and so on. The total of these items, they may be small, each one of them, but if you paid out-of-pocket costs here that were not reimbursed by your employer, the total has to exceed 2% of your adjusted gross income.
Adding all these up.
Adding them all up.
Let me just read through the list. Job search costs, work-related publications, professional association dues, like if you're in a union, work uniforms, tax prep fees, investment advice fees.
All of these will total over 2% of your adjusted gross income. So if your adjusted gross income is $50,000, 2% would be $1,000. Anything over the $1,000 that you paid is tax deductible here. You know, and this can add up for you here. But now, there are some gray areas, as you mentioned. Just because you got to look great and you got to wear those great clothes on television, Julie, because you can wear those personally in a social setting, not deductible here. Firefighter, police officer, nurses, scrubs, those airline pilot, those uniforms are specific to the job and they're probably not wearing them for personal reasons. The cost of those would be deductible. But there's a lot of things, as you mentioned, even the cost for tax prep software and a book to help you prepare your taxes. Add that all in. Anything over 2% of your income could be deductible. It's a big list. Help your tax pro. Make sure you give them the data.
Okay. Let's talk about very specific deductions that people should know about. First, this is new this year. It's a credit for having like an energy efficient house.
If you made energy saving improvements to your home in 2006, the cost of those from $200 to up to $2,000 in tax credits could be available for things like insulation, roofs, and solar water heating systems. Brand new. Make sure if you made those improvements, you take the tax credit.
In the final seconds, this educator expenses deduction of $250.
It was set to expire last year, and Congress passed the last-minute extender in December, so it didn't make it to the tax forms. If you're a teacher, you can take a deduction for $250 of out-of-pocket expenses. If 2 teachers file a joint tax return, $250 each for $500. Right on the front of your tax return, you don't have to itemize to take the deduction.